Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. All right, greetings, everybody. I got an email today from the Lederman Group, Jordan Lederman. They're a group down in Miami, Fortune Christie's International, and Fortune in Miami. Several, just links in the email that led to these various headlines. I'm going to read a few of these. From the Robb Report, Mark Zuckerberg, founder of Facebook, dropped $170 million for a waterfront estate on Miami's Indian Creek Island. Fox Business, AI giant Palantir, moves its headquarters to Florida. Billionaire Google founder drops $51 million on Miami mega mansion. New York Times, the new Miami gold rush. Bloomberg, billionaires fleeing California. Wealth tax snap up Miami mansions. So we're just seeing these headlines. If you were to see these, if you were to look at these, you get this email and you think to yourself, well, Miami's real estate must be booming. But is it really booming? Holistically. And my opinion is it's not. And I think what's happening is we're very bifurcated here in Miami. And it's an example, I think, that you'll see in other cities, not just Miami, but there's other cities that are seeing this. I think Miami's sort of the leader, maybe the number one here in the country, where, billionaires as well as firms, companies, moving in, bringing in a lot of money. There's been, a lot of things saying, out there saying, well, Miami's the Wall Street of the South and so forth. And what you get is, that luxury, let's call it ultra luxury market, that certainly looks really good, looks really healthy, as more and more folks snap up $20 million waterfront homes. But what about the condo market? What about the single family home, median single family home, especially market? How's that doing? Well, you got homeowners associations raising prices and dues. You got insurance spiking. Affordability is a challenge. Interest rates are lower, mortgage rates are lower, but they're not that low. And that's when you start to see that bifurcation. You look at a market like Coral Gables, a suburb of Miami, and you see, month over month sales improving. You see median values of homes going up. You see similar in places like Key Biscayne. But you don't see that in some of these other, what you see in some of these other median sort of single family home and condos. You either see a sort of a flat line or even somewhat of a drop in sales. So that insurance crisis and all that, it's going to cap prices because affordability for locals becomes a challenge. And many economists agree with this very view. This just, is not just my opinion. One that was very notable to me was Thomas Piketty. He has research on wealth inequality, and he explains why luxury housing booms are global. When wealth concentration, his core idea is when wealth concentration rises, the top 1% buy trophy real estate worldwide. And he talks about cities like Miami. He includes Vancouver, Singapore, and Monaco, areas where you see exactly what I'm referring to. Wealthy cities kind of evolving into this sort of almost like a barbell, a lot of wealth on one side, not so much on the other. And that's where that part of the market. So, these markets, these real estate markets, we talk about they're localized, obviously, city to city. But even within cities, you can see differences in one part of the market versus another. It's a very interesting dynamic, and it's happening right now in a place like Miami and probably a few other cities too, as I mentioned.